Ben here, East West. Tough week, right? Pretty awful for uranium and the market in general. So I think we're just going to start off by having a bit of a look at fundamentals, rate cuts, the S&P, and then we'll just move in to have a look at what's happening with URA and CCJ as an overall view of the market itself. So here's just a chart of the S&P on a monthly, and below here, this is the US cash rate. So I think the point to look at here as a case in history is if you look at this sell-off, this would be the tech wreck. But if you look at this sell-off and you look at what the rates do, the market and the interest rate go south together in concert, okay, until the rate gets low enough that the buyers step in. Same thing here happened here with the GFC. Okay, so the market's getting tanked as the rates are going to come off until we hit the bottom of the rates. Now, obviously, COVID was a little bit different because that was such a quick event. So I don't know if I'd put too much credence into that. But certainly just going back to look at these two examples and now looking at where we are now, because this feels a bit more like a run-of-the-mill market prepping for a recession. And, there's a lot of deck shuffling going on. The point here is that the market can come down at the same time as the rates can. So what I'm saying is don't discount the fact that we do this while this is happening. Okay, this is certainly possible. I don't think the Fed are going to cut rates to zero, of course, but the point here is that rate cuts may not necessarily immediately save the market. We could be in for quite a few months of heavy price action. So now at this point, we've got to consider the S&P and the greater macro picture. So at the moment, and this is what you've got to keep in mind. I think at the moment, we haven't fallen that far, even though it feels like it, but we haven't even gone through a market correction yet. Okay, so the S&P index itself has got to get to 5,110 roughly before it's into an official correction, and a full-blown bear market is not until 4,500 and sort of 40 odd. That would represent 20% down from the peak. It's interesting to note that a 20% pullback would put us right back into the retracement of the last large swing, right back down to the 50% line, which would line up with the old peak that we had back in July 2023. Now, it's not impossible that the market goes this far. Certainly, I think at a minimum we can come down and challenge this bottom here from from April this year. Definitely, the market could easily work its way down there. And it'll happen fast if it does happen. Now, as a quick side note on market dynamics here, look what's happened with the S&P since we've come off this low in October 22. Okay, so we had 32% rally, a pullback. We had a 28% rally. We had a pullback. We've had a 14% rally. So the upswings have definitely shrunk in their size and their speed and their magnitude, and that was a warning shot. Coupled with the S&P, it's a very slight divergence, but it was there, okay, between this peak, and you can see what happens when it doesn't mean that the market is going to necessarily come off. In this case, it has, but you can see here it trailed along the top until it finally gave up. But it probably just means that the top is getting ripe, okay, and I think with this dynamic going on, plus the changing scene in terms of macro, we can see the data starting to weaken off now, means that we are quite likely in for a market correction. So now just looking here at URA, now if you're new to uranium and you haven't been in it that long, I don't really know what to say to you other than just maybe go back to your pump accounts and ask them why the market's getting smashed. If you've been in it for a while, hopefully you were wise enough to have a plan to bail out if it all went wrong. Which it now has, and this is an example of how quickly things can fall apart. And this is why, the fundamental thesis guys will laugh at technical analysts. But if you can tell me what's changed in the fundamental landscape between the top here in May and the nearly 30% fall we've had up until July in 2 months, have the fundamentals changed in 2 months? And if they haven't, why is the price fallen 30%? Maybe ask them that. Nonetheless, we've just got to consider what's going on here now, because this has really moved now to a point where it's really upset a lot of my views. The thing that's concerning me the most is we've lost we're going to close below here, but we've lost the weekly Ichimoku cloud. That is a very big warning shot for me. It just means that this trend, we've now enough time has gone by where this trend it's kind of all over. I mean, we said that before. I was hoping that what was going to happen here was that we were going to go into a range, but we haven't. We have just absolutely failed and broken right down. So what do you do here now? Well, like I said, I mean, if you're not in, I would just stand clear. If you're in, well, I don't know. I don't know what to tell you. Personally, if it was me, I would have been out below here. Okay, as soon as we really started to crack here, I would have been out. If you're still a believer in the story, well, hold on. But if you are a believer in the story, how low could you possibly have to wear this? Well, if it was me, I'd be mentally preparing for a trip down to here and to test all this at least. So I'd be preparing for a trip in URA down below $20. If you can't handle that, then just get out. I mean, I'm not going to tell you what to do with your own money in your own portfolio, but the way I'm looking at this now, this is what I would expect to happen. The problem being that now this is really starting to appear like a completed three-wave move like that. Okay. There is always possibilities that this can morph into something else, but you've just got to deal with what you can see right now. And what we can see right now is a god-awful weekly candle that's really starting to take a lot of things out with it. I mean, if you want to sort of sift through it for raise a hope, well, yeah, I mean, you could probably come in here and look at this and go, okay, well, look, there's a bit of a bottom here. But would I be standing in front of this? No way. Not a chance. Not the way it's going. Not the way the whole market's going at the moment. Because as I said, when things fall apart, they fall apart quicker than you can believe possible. And that's what's happening right now. The problem with the way this is going is this is kind of looking really very much like an impulse. Okay, this is looking like a 1-2, and this is looking like a third. So this could be an area for the third. This could be an area for the third. But if this is going to be 5 waves down, then what we would expect is a fight before the final capitulation. That's what I would be expecting. I would not be standing in front of this. That's just my opinion. All you can really do here is just wait until the market shows that it wants to make a bottom, and it just doesn't look like it wants to at the moment. So, if you're hunting around for a bottom and a target, I would, until this thing actually starts to show. I said this last week. I mean, it's just a downtrend, right? Until this thing actually starts to go back the other way, we're not close to a bottom. It's just not showing any signs. I would suggest you go and have a look at the Red Devils video. He's tracking very well with some moving averages, how the price is unfolding. Okay. However, in a word of warning, his videos and my videos, if you're looking for a pump, go and find some other videos. There's plenty of them that'll tell you everything's great. We just look at what's happening technically, okay? And this is what's happening technically. That's just the way price is moving. So if you're looking for good news, I am sorry, but until we start diverging and trending the other way, there's not much else to say other than get out of the way. If you don't have a plan, if you were just sitting here without a plan or an exit strategy, I don't know what to tell you. If you don't like it, get out. That's up to you, not up to me what you do with your money. But if you're just sitting here hoping for it to come back, like I said, I'd be mentally preparing for a trip below $20. That's just my opinion. CCJ weekly, right? Hanging on by a thread to that cloud. But I would expect that we are going to get on the underside of this cloud. That is just the way I would read this now, considering the overall market dynamics. And this is another example where the fundamentals go out the window if the whole market's getting tanked, and the whole market is getting tanked. It's not a correlation. It's not a ratio chart. It's not doing this against gold, cocoa, coffee, whatever. It is simple market dynamics of the herd and the shifting sands of the overall market. It's nothing more than that. So maybe it does outperform the overall market, which means it just doesn't get hammered as hard as everything else. But that's not happening right now. It's underperforming the market. It's getting smoked. We're now down about 30% from the peak. And what's changed fundamentally with the stock? What's changed with the thesis? So ask yourself before you lean into that stuff super hard that it can't go wrong, because I've said this multiple times, and I'll always warn, things can go wrong for unforeseen reasons, and the market can just get smashed out of nowhere, and nothing really changes. It just does happen. It's why you've always got to have a plan, about how you're going to deal with this. And my fear is that most people who are invested in this stuff don't have a plan. They don't have an exit ramp. They're just busy listening to pump accounts that are telling them it's going to the moon forever. Maybe I've been a little bit guilty of that, but my view was that we were going to find our feet and continue on, but we're not doing that. So, strong opinions weakly held. And my opinion's changing on this very, very rapidly. The question that goes through my mind now is this now a completed three-wave move? And if it is, what does that mean? Well, it means I'd be mentally prepared for the trip in CCJ down to $30, probably down to challenge these old peaks. I would seriously, that'd be what I'd be mentally preparing myself to happen. If you don't like the thought of that happening, well, I don't know, but you're going to have to decide what you want to do, because that is my view. I would be looking for that to happen. That's what I would be expecting, that we would come down here and challenge some of these old peaks in CCJ, okay, on a major correction that's got much more to do with the overall market than it does with CCJ itself. Now, ray of hope, yes, we are now just sitting right here in the 50. So, look, there's kind of a bit of anticipation to what I've said. I'm anticipating that this won't be the bottom and we get on the other side of that cloud. But, you can also make the case, it's like, oh, well, we've come right down here, and if we tested this ultimate level and come back, it's possible. But I'm not feeling it, guys. I'm just not feeling that this market is ready to bounce anytime soon. The problem here is this is a much more impulsive move, because we've come down, we had this it's now turned out to be a dead cat bounce, and we've come even through the number one area for a wave 3, and it looks like we're on our way even down here to make it to the 261.8. Look, the market could find its feet somewhere in here for sure, but the problem is, and like I just showed before, just because the rates start getting cut doesn't mean that the stocks are going to instantly rally. We could just be in for a very rocky ride for the rest of the year in the stock market in general, I think. The Fed don't meet again until September, and now they're talking about 50 basis points of cutting. I don't know about that. I don't know if I'm on board with that just yet. But yeah, look, there are some levels here. So it always bears watching. I'll say again, go back and check out the Red Devils videos. I'll put a link in the description. He's got a very good way of breaking down the market in terms of looking at the moving averages. But this is just it's a bearish market. I mean, you can't. There's no bottom here that I can see right now. It's getting heavily pumped. So in times like this, you've just got to sit back and wait for it to find its feet, and to start to give you the signs that it has had enough of the selling. But right now, I can't see it. So yeah, it's big picture stuff here, guys. I think you just got to sit back. Okay, if you're not out, you're either going to ride out the storm, or just cut it out. The only thing I'd say about this, and this is your plan, but if you want to cut and run, just have a plan about what you need to see to get back in. Okay, that if you're concerned about what's going on here. So I don't have any more to tell you this week, guys, except that I'm expecting more downside in the general market. But things, what we've seen, the main theme that you've seen here today and this week is that things change in an awful hurry. So yep, we could have a face melting rally, there's no doubt about it, but from what I can see and my experience in the markets, I can't see a bottom coming anytime soon. I can't see the market overall bottoming next week, let's just put it that way. So good luck, stay safe, I'll see you next time.